Hi everyone, good morning.
Good morning.
Okay, let's review what we learned last time. Okay, so we started chapter 21 last time. We just reviewed, right? We reviewed those basic concepts of cash flow statement. So this is the example of cash flow statement. So we classify our business activity into three, right? Three activities. We have operating, we have investing, and financing, right? And each activities, we're gonna list those cash inflow. Cash inflow means we receiving cash, right? And then cash outflow means we make cash payments. Okay, so we're gonna list those inflow gonna increase the cash. That's why it's a positive, right? Outflow is decrease our cash. That's why it's negative. Okay, so then we calculate net changes for each activities, right? So this is operating, investing, financing, and then we calculate the total here. You got a 9, right? So that's a net increase, the positive. That's why we say it's net increase in cash during the year, right? So now we look at the balance sheets. The cash balance at the beginning of the year is 20. Now at the end of the year is 29. So which is reconcile, we double check, right? So this is correct. Okay, 20 plus 9 gonna be 29, right? So this is the cash flow statement. Okay. And then we talk about those three activities one by one, right? So we talk about this the the operating activities. We have two methods, right? Direct method and indirect method, right? And the direct method, we're gonna list those cash inflow, right? So again, like this, right? Cash inflow, those are cash outflow, okay? Directly, then we figure out this, right? So then indirect method, we're gonna start with net income, right? Plus minus those adjustments, you got net cash flow, okay? So this is what we learned last time, and we went over the investing activities and financing activities, right? Uh, so you need to identify uh, what kind of activities they are, right? So that's very important, right? So you're gonna then the classification, okay? So this is that's the very basic, okay? So it's very important. Um, so so now today we're gonna work on the new approach, okay? New approach. Okay, so those are the track of investing. Okay, we know what investing activities, right? So and financing activities. Okay, so those things we talk about. So now we're gonna work on this new approach. Okay, so we call that you can call that spreadsheet approach. Okay, so we're gonna use a spreadsheet. We're gonna use a spreadsheet. Okay, to prepare the statement of cash flow. Okay. Um, So this is a new approach, okay? This is a new now, okay? The previously we did all just the review, okay? We learned those already, okay? Okay, so by the way, any questions so far? I mean, before we start this new approach, not really, okay? Okay, so again, this is you can call it spreadsheet approach, okay? Spreadsheet approach. What we do is, we're gonna list those spreadsheets. You know, so this is the balance sheet, right? This is the balance sheet statement. Okay. So this is the balance sheet statement, right? You can see the balance sheet. We have assets, liabilities, shareholder equity. Okay. And this is a spreadsheet. Okay. So you can, I can put a column here, right? So this is the one column. Okay. Okay. So this is the balance sheet from the previous years. Okay. And this is the balance sheet of the current year. Okay, so this is the current year balance sheet. Okay, you can see this is by the end of 2011. So then you see the cash, right? So cash was 20 by the end of 2011 is 29. Accounts receivable was 30, right? By the end of 32, like that. Okay, so this is a spreadsheet, and also we have these two column. Okay, so one is a debit column, right? So this is the debit column. Okay, it's debit column. This is the credit column. Okay, so we're gonna fill out. Okay, I'm gonna fill out some numbers here. Okay, but you understand, right? So this is the spreadsheet. Okay, excuse me. This is a spreadsheet. This is a sorry. This is a balance sheet spreadsheet. Okay, so this is our first spreadsheet, and our second spreadsheet is income statement spreadsheet. Income statement spreadsheet. You can see this is the previous year, but we don't need this one. Okay, we don't need this one because this cash flow statement doesn't relate it. Okay, anything from the for the previous year's income statement. So this is the current year income statement, right? So this is what we need. Okay, and also have this column, right? So we have this debit column, right? We have this credit column. Okay, so you can see that this is a spreadsheet, right? So for example, the sales revenue this year is 100, investment revenue is 3, right? Gain on sales was 8, right? Etc. So these are the spreadsheets, right? So those are the spreadsheets, okay? Like that, right? Everyone's clear, right? So this is our second spreadsheet. It's the so-called income statement spreadsheet, okay? So we're gonna fill out, okay? Similarly to the balance sheet, we're gonna fill out these, debit column and credit column. Okay, we're gonna do that one by one, okay? So this is our third spreadsheet. This is spreadsheet of cash flow statement. Okay, cash flow statement. As you can see here, we're the group, those 3 groups, right? So operating, investing, financing. Okay, we already list those are 3 groups. And then this is definitely this column we don't need it. Okay, the previous years we don't need that one. So this is the debit column. Okay, so we have this debit column, right? So we have this credit column. Okay, so debit column, credit column. Okay, so we're gonna fill out. Okay, gonna fill out some numbers here. Okay, so then this is the total. Okay, of this year's cash flow. Okay, so we have 3 spreadsheets. Okay, and then we're gonna fill out those one by one. Okay, so again, this is the new approach. Okay, I'm gonna show. Let me show you how to fill out. Let me give you a couple of example. Okay, couple of example. Okay, so this is the first one. First example is this is you can see, here we have 2 spreadsheets, right? So we have this is the balance sheet spreadsheet, partial, okay? You can see, right? And the top is partial balance sheet statement spreadsheet. And the bottom is income statement spreadsheet. Okay, so we're working on the sales revenue here, and then accounts receivable those informations. What we're trying to do is we're trying to figure out what is cash receipts from customers. Okay, cash receipts from customers. Okay, so I think it's better. Let me go back to those example. Just yeah, like this, right? So you can see here, we're trying to figure out this numbers. Okay, the cash receipts from customers. Okay, or cash inflow from customers. Okay, so this is the first. Usually, this is the first item, right? In the cash flow statement. Okay, so let me show you how to do that. Okay, using this spreadsheet approach. Okay, so cash receipts from customers is related to, remember, the cash receipts from customers related to, it's a revenue related to our sales revenue, right? So we sold our revenue, we sold our the merchandise, then we recognize the sales revenue. Okay, and then we have accounts receivable, right? So then we will collect the cash payments. Our accounts receivable gonna decrease. Okay, so this is the T account. This is the old method you learned. We learned previously, right? So this is we use this T accounts. This is the accounts receivable T accounts. Beginning balance here is equals 30s, right? That's why beginning balance should be 30s. Okay, by the end of the year, it's 32, right? So it should be 32. Okay, so when we have sales revenue, what do? We debit accounts receivable, we credit sales revenue, right? We debit accounts receivable, we credit sales revenue. That's why we let's assume that all of the sales revenue are the credit revenue. Okay, so credit sales. That's why we're gonna debit a total 100 to this accounts receivable account, right? Because this sales revenue is 100. Okay, so totally this is aggregated. Okay, so total you're gonna each time you're gonna debit, right? Accounts receivable, credit sales revenue. Okay, so total. So that's why total debit to accounts receivable should be 100. And then this part here is the cash received, right? So when we receive cash, what do we do? You debit the cash, right? Something you credit accounts receivable. Okay, so that's why the total cash received from customers should be what? Should be this, the same number with this, right? With total credit to accounts receivable. Okay, so total credit to accounts receivable. Okay, so now if you look at T accounts, 30 plus 100 minus this some numbers here should be what? 32. That is why this number should be 98, right? So this should be 98. Okay, so that's how we get this. This is called the cash received from customers. Cash received from customers. Okay, so this is the old method we learned previously. Okay, so once we have this 98, then you're gonna put it in the spreadsheet. Okay, 98 like this. Okay, like this. Okay, so cash received from customers 98. Okay, but actually, so this is the old method. Okay, so what is new method? Okay, let me talk about the new method. The new method is we actually can write, we call the summary journal. We're gonna write a summary journal. Okay, we put those accounts, related accounts together, write a journal. It's a summary journal. Okay, it's not a real journal, but it's a summary journal. You can include all of the items related. Okay, related items. So in this situation, what we can do is, because the accounts receivable, should look at that, accounts receivable increased by $2. This is the millions, right? $2 million. Okay, accounts receivable increase. Accounts receivable is one of the assets, right? So asset increase, you should debit, right? You should debit accounts receivable for 2. Okay, and we receive cash in this case, right? So we collect cash from customers. We should debit cash. Okay, but we don't know how much. Okay, so that's why we debit cash, right? And then we have a sales revenue. When we have a revenue, we should credit, right? We credit sales revenue for 100. Okay, so that's all, right? So for this journal, if you look at this journal, we debit accounts receivable 2, we credit sales revenue 100. We should debit cash for something, but we don't know. So to balance this journal, this has to be 98. Okay, so we have to debit cash for 98. Okay, so see this 98 is this 98, right? So this is two approaches. Okay, so one is use T account to figure out 98. Another approach, we write this summary journals to figure out this 98. Okay, the cash receipts. Okay, and then we're gonna go to this spreadsheet. Okay, to fill out like this. Okay, so remember we need to debit 2, right? Debit 2 to accounts receivable. So this is accounts receivable, right? We should debit 2. Okay, we put the debit column. Since this is a debit column, right? We put the 2 over there, and then we should credit 100, right? So this is credit, right? Credit 100 to sales revenue. Okay, and then we should debit 98 to this. This is the cash flow statement, right? So this is the cash flow. Okay, so we debit the cash. In this spreadsheet, when we debit 98, means we debit cash 98. And this cash belong to what? This is the cash receipts from customers. Okay, so this is the first example. Are you guys okay with that? Any question? Am I clear? Am I clear so far?
Yes. Yes.
You guys okay, right? Okay. So we just introduced the new method. Okay, so we compare with the old method. We use that T accounts, right? So this uses this T accounts, right, to figure out this 98. Or we write a summary journal in the spreadsheets. Remember that summary journal in the spreadsheet, we write it down in the different spreadsheet, but together, you put it together, will be, where's my journal? Will be like this, right? This is the summary journals, okay? But we put it in the different spreadsheets, okay? But if you put it together, that will be the summary journal, okay? So this is our second method, okay? So that clear? Second method, okay? So again, the first method is the T account method. Second method is the summary journal method. You write a summary journal, okay? So in this example, we write it down in the different spreadsheets. For example, we debit 2 to accounts receivable, right? We credit 100 to sales revenue, and then we debit 98 to the cash, okay, in this cash flow spreadsheet. Okay.
Do we need to use two methods at the same time?
No, you just need to use one method, but the summary journal method is recommended. Okay, I would say required. Okay, you need to know how to write a summary journal. Okay. The T account method we learned previously, right? So you should understand that method already. Okay, we just learned the second summary journal method. If you compare summary journal method with T account method, you will see the summary journal method is much easier than the T account method. It's a better method actually. Okay. So the another example is related to short-term investment. Okay, short-term investment. See, look at this the balance sheet spreadsheet, right? Which is our first spreadsheet. Remember, we have balance sheet spreadsheet, income statement spreadsheet, and the cash flow spreadsheet. Okay, so this is our first spreadsheet. You can see here at the beginning of the year, the short-term investment was 0, right? This is not, you don't have numbers here. This was 0. So by the end of the year, it become 12. That tells us short-term investment increased by 12, right? So when short-term investment increased by 12, we just gonna debit 12. Okay, debit 12 to this accounts. Okay, so in the balance sheets, and then we should credit 12 to cash, right? So you can imagine what happened, right, for the short-term investment. So we use our cash to make, we spend the cash to make more investment, right? So we purchase some kind of security. We don't know exactly what kind of security it is, right? The stock and bonds, okay? So we purchase those stock and bonds. That's why we have short-term investment, okay? So we spend the cash. That's why we credit cash, okay? We have cash outflow, okay? That credit to cash, $12 million is for purchasing of short-term investment. So when you purchase short-term investment, what kind of activity it is? It should be investing activities, right? Investing. That's why we put it in the investing activity section. So we have a credit 12 to cash. So this is cash flow statement spreadsheet. Okay. So that is the second example. Okay. Another example, let's see what else here. Okay, so another example is this. The buildings. You can see this is this is the cash flows. This is the balance sheet spreadsheet. You see the buildings and equipment, okay, which is we increase 20 and we sign a note for 20, okay. So this is oh, by the way, I forgot to do that one. Yeah. Okay, so let's do the exercise. I'll come back to that. Okay, let's do exercise. Let's practice. Okay, let's practice this exercise. I just want to. Oh, wait. Okay.